Welcome to Equity and Ag, your afternoon market update. Let's take a look at how the grains and livestock wrapped up the session today. Corn futures finished Tuesday mostly unchanged as trade stayed fairly quiet following the USDA report. March corn settled at $4.2875, while May futures edged up slightly to $4.3725. Volume was light, but March contracts managed to stay above nearby technical support around $4.27. On the upside, traders continue to watch the 50-day moving average near $4.37 as the next bullish target. The WASDE report included just one notable adjustment for corn, with USDA raising U.S. export projections by 100 million bushels, bringing the total to 3.2 billion bushels. That puts exports running about 15% ahead of last year's pace. Ending stocks were reduced to 2.127 billion bushels, slightly tighter than expected, but still on track to be the largest U.S. corn inventory in roughly 7 years if realized. Soybeans continued their upward momentum on Tuesday, with March futures gaining nearly 12 cents to close at $11.22 May beans followed suit, finishing at $11.37 The rally wasn't driven by the USDA report, but instead by reports out of Brazil suggesting excessive rainfall has led to mold concerns in parts of Mato Grosso. That pushed March beans to their highest close since early December and kept the trend of higher lows intact. USDA made no changes to the U.S. soybean balance sheet, holding ending stocks at 350 million bushels, and exports at 1.575 billion bushels, a multi-year low. Officials appear to be waiting to see how demand develops as Brazil's harvest moves forward. Soybean oil remained a supportive factor, with prices reaching their highest levels since late 2023, while global production estimates edged slightly higher on increased Brazilian crush. Wheat markets were mixed on the day. March Kansas City wheat finished modestly higher at $5.30, while Chicago and Minneapolis contracts slipped lower. Technically, Kansas City wheat continues to hold near trendline and moving average support in the mid-520 range. Resistance remains up near $5.50. USDA's wheat adjustments were minimal, trimming food use by 5 million bushels, which nudged ending stocks up to 931 million bushels, the highest level in about 6 years. While export commitments remain well ahead of last year, USDA left export projections unchanged, likely reflecting stiff price competition from Russia and Argentina. In livestock, Tuesday's cattle slaughter totaled 116,000 head, slightly above last week but still below year-ago levels. Live cattle futures closed mostly lower, while feeder cattle saw broader pressure by the end of the session. Beef cutouts were mixed, with moderate to good movement reported across the box market. That's a look at how the markets shaped up this afternoon. We'll keep an eye on technical levels, export demand, and global weather as we head deeper into the week. If you find these updates helpful, make sure to check back for our next recap. This content is for informational and educational purposes only and does not constitute financial, investment, or trading advice. Market conditions can change rapidly. Always do your own research and consult with a qualified professional before making any trading or investment decisions.